Hello, and welcome to another update video on ADA. So on the ADA chart, I'm going to start here on the daily chart. I mean, the scenarios have not changed, but we are starting to break below initial micro support levels. It's not really a decisive break yet, but it looks like we might be getting there. And so, yeah, I mean, we just need to be ready for deeper pullbacks. It looks like that. At least I have no confirmed low in place anywhere yet at this point. So at the moment, what we're tracking here is a sideways range, yeah, in the yellow scenario. That's the short-term bearish count. Let's just start with that. This is unchanged. We discussed it in previous videos. We have an A wave down, we have a B wave, and a C wave. And then that B wave is a triangle. A, B, C, D, E. And so in this triangle pattern, we could form a D wave down and a lower high in an E wave before breaking down. This is like the short-term bearish count that remains valid as long as the market stays below the green line. And that's at $1.18. Okay, so this is of course getting more probable as we're breaking below micro support levels, but cannot be confirmed until we really break below 51 cents. Because that's the swing low here from June, April, and January. So that's an absolute key level there. But we're still overall in a range. So just need to be ready. Of course, the range can break to the downside, especially with ongoing weakness in the sector, which goes a little deeper than ideal. But we'll talk a little bit about that on the smaller time frame in a minute. Now, when we talk about the rally to the upside here, the upside potential, yeah, I'm still tracking this as a potential ABC structure to the upside, and the wave 4 as a triangle might have completed. And in the white scenario, we can still get a 5th wave to the upside. So far, we haven't seen a 5-wave move up yet from the June low. So it's only 3 waves. Now again, remember we're dealing with a diagonal structure. So we do not necessarily need a 5-wave move in order to go higher. A 3-wave move would be fine. The fact that we're starting to break below initial support could indicate that wave A already topped, and we're now in a B wave pullback. Now, I want to share with you a deeper support area that might be worth watching, which I'm not showing yet on the 1-hour chart. But in this scenario, the market could find support in this region between 57.8 cents and 73.9 cents in any deeper pullback. Yeah, it's just a Fibonacci support zone to watch that's based on the length of the rally from the June low to the July high, in case we get a deeper B wave or even the D wave in the yellow scenario. Even though we all know that B waves or even D waves in triangles don't respect Fibonacci levels so well. So it's not based on, because it's not necessarily based on an uptrend, right? Because without a 5-wave move up, we don't really have that evidence. Okay, so now let us talk about the shorter time frame then. And this is where we can see that the market has started to break below initial support. Not exactly a decisive break yet. And that break of support wasn't improbable, given that I already highlighted to you that so far we haven't seen any 5-wave move up. And the 100% extension, which is actually an ideal target for a C wave, is at 69.9 cents. So we are approaching that level right now. We are tracking still this as an ABC structure, but I haven't got any clearly defined low in place. And we're only now approaching the 100% extension, which is normally the ideal target for a C wave. So what we need to see here next is a break above the last swing high that formed at 78.8 cents for an early indication of a low. And then obviously a break above 85.5 cents. And we need a micro 5-wave move up. At the moment, the local trend is down. It's still overall seen as a 3-wave move down. But as you've just seen on the larger time frame, there is a potential that this turns into a larger pullback. I mean, we can add this area now to this time frame as well. It's just that this might not be a wave 4 anymore, okay? So that's why I wanted to show you both time frames. Depending on how deep we go, if we reach the 50% Fib level, then I will probably change the wave count here on the smaller time frame to reflect that this is either the D wave or the B wave. So we already have the support area in place for that. And technically speaking, this wave 4 that we're tracking here isn't going to be invalidated until we break below the wave 1 high anyway, technically speaking, right? And that's at 61.2 cents. But you know that this is already a deep wave 4, so it's not ideal anymore. But yeah, basically watching here for reaction maybe in this area around 69.9 cents to 68.8. But below that level, it's going to really get tough for the bulls. That doesn't mean further upside is ruled out, but it means that this is not an upside impulse anymore. Same discussion we had on the Bitcoin chart, might not be an upside impulse anymore. So that's the update on ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye. Thanks so much for watching the videos on this YouTube channel. If you've been thinking about joining MCO as a member, now might be a great time. You can use the link in the video description and apply the discount code right below it. You will get 50% off your first month of our Gold membership, and you can explore everything we offer. It's the easiest way to test the membership, see if it's a good fit for you, and get a feel for the community, join the conversation, and I'm looking forward to meeting you in our member area.